Hello investors and future investors, welcome to the channel. In this video, we're going to be practicing our Iron Condors. Now, Iron Condor is a more advanced strategy. It actually involves 4 legs. If you're new to the channel, thanks for stopping by. For those of you on the weekly income team, welcome back. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. Welcome to Investment Gains. Let's jump right in. So for today's option strategy, we're going to be doing the Iron Condor and we're going to be using American Airlines, ticker AAL. Okay, so here we are on the American Airlines option chain. Now, first of all, we're going to select our strike date. We're going to use July 23rd, which is only 1 week out. Now, like I said earlier, the Iron Condor is a 4-leg option strategy that consists of a put credit spread and a call credit spread. So to start off the video, we're going to be doing our put credit spread. So we're going to be going with the strike price of 19.5. And since we're selling a put, we're going to receive 0.52 or $52. As you know, each option contract is multiplied by 100 shares. So now we're going to go over to buy and put, and we're going to select the strike price of 19. And since we're buying, we now have to pay 0.35. So as you can see up here, it says put credit spread. So half of this leg is already done. So now we're going to go over to our calls and we're going to perform the call part of this Iron Condor. So now we're going to go to select our $22 strike. Actually, no, let's do the 22.5 strike. And once again, since we're buying, we're going to have to pay 14 cents. Now we're going to go over to sell, or we're going to select the $22 strike price. And since we're selling, we're going to receive 19 cents for it. We hit here, and like you see right up here, it says Iron Condor. Now, if it says anything else up here, then you do it wrong. I suggest you rewatch the video so you could get it correct. Iron Condors are a more advanced strategy, so you may have to practice this a lot more than one time. Now, once you do this Iron Condor, you're going to be receiving a total credit of $22 into your Robinhood buying power. Now, how did I get $22? Well, as you know, 22 cents multiplied by 100 shares is going to give you $22. But let's continue. The fun doesn't stop there. Let's go to continue. We choose the amount of contracts we want, which is usually 1. We hit review. And then now you're going to get a better picture of exactly what's happening here. So, like I said a bit earlier, in order to do the Iron Condor, right away you're going to receive $22 minimum credit into your Robinhood buying power, and that is yours no matter how this trade goes. And I'm going to explain to you how you win this trade or how you lose this trade. Secondly, in order for you to do this trade, you need to leave a $50 collateral. So your returns is going to be $22 based off of $50 collateral, which represents 44% returns. In my book, that's pretty decent. Okay, so let me break it down for you. So in order for you to win this Iron Condor on July 23rd, you want the share price of American Airlines to be between your sell. So it's going to be between right here, you see sell to open 19.5 and then your call 22. Once it's between these two sells, then you're going to keep your minimum credit and you're going to get the collateral released back to you. So when do you want to use an Iron Condor? Well, you want to use an Iron Condor whenever the stock is trading flat or sideways. Now, there's 3 ways in which you could win with an Iron Condor. So if the stock goes up just a little, you win. If the stock goes down a little, you still win. And if the stock continues to trade sideways, then you win. Hence, Iron Condors have a higher profitability of success than other option strategies. Now, the downside of an Iron Condor is that it's harder to fill. The reason why it's harder to fill is because instead of 1 or 2 legs, this option strategy needs to have 4 legs filled in order to be processed. So it's a bit harder to get it done. In my experience, once you put down an Iron Condor and wait for it to be filled, if it's not filled after an hour, just go ahead, cancel the whole thing and then do it again. Usually after I do it 2 or 3 times, then it usually gets filled. Now, Iron Condor, the risk to reward. Like I said, $22 off of $50 collateral, that's pretty decent in my mind. Word of caution, before doing an Iron Condor, always check to make sure that the stock is not due for earnings or dividends anytime soon. The reason for that is that this could spike the stock price in either direction, up and down, and it's going to blow past your sells. So now we're going to go ahead and go straight through with this strategy so you could see how simple it is. It's not as difficult as people make it out to be. So first, let's go with our strike date, and we're going to choose July 23rd, which is 1 week out. Make sure it says sell and put, and then you're going to go with the strike price of 19.5. You're going to go over to buy and put, and then you're going to choose the strike price right below, which is 19. Now you're going to switch over to your calls now, and you're going to do your buy call first. Now for your buy call, we're going to choose the 22 strike price right here. Then we're going to go over to sell a call, and we're going to choose 22 strike price right below, which is going to be 19. And there you have it, Iron Condor. Quite simple. So if you guys have any questions about Iron Condor, leave it in the comments below. Now, we have a lot more strategies on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell to get an alert whenever I post a video. But most importantly, if there are new traders here that are trying to learn the trade, please share this video with them. Let's help as many as we can. Thanks for watching, and remember, always take your investment gains.